Hello nieces, hello nephews, it's your Uncle Chiddy here and welcome back to my YouTube channel where we do unbiased price action analysis. And guys, you're looking at the daily chart here and we got 3 closes above Uncle's triangle pattern. We also have 3 closes above that yearly trend line that started last year in January. 3 closes. Now let me tell you something. I'm a bit skeptical with these breakouts. Why am I skeptical? I'm looking at these breakouts and less than 50% of the candle bar is closed above the breakout level. That tells me right there that these breakouts are not that strong. Now I've been saying to you guys, we could get a one directional move and we can get the breakout, okay? Of course, we got to see some follow through. Well, we got 3 closes above these breakout levels and we are not getting that one directional move that Uncle mentioned. My bad. But like I say, guys, there's no 100% in this market. As long as this breakout holds, you guys know textbook breakouts, they usually lead to more upside. Unfortunately, lately, these breakouts are not leading us to more upside. As a matter of fact, despite that big gap down that we had this morning, SPY recovered and closed relatively to around where it been closing all week. So in my opinion, the SPY is consolidating for the next move. Okay, so as usual in Uncle's videos, we're gonna talk about how I traded. We're gonna talk about what I plan to do next, giving you guys the bull case scenario and the bear case scenario. So let's prepare. All right, so as far as how I traded goes, you know, I always try to simplify it. We short the breakdowns of support. We play it level to level. We long the breakouts of resistance. We play it level to level. And of course, we can always leave runners. So right here, you guys can see SPY opened around 395.95. So that made first support around 395.7. That is the 23.6 fib level. All right, 23.6 fib level. If you started from October low up to December high, you will get 395.77 as a 23.6 fib level. Okay, that was our first one, and you see it broke down. Boom, broke down right there. When you look to enter, you look to enter as it breaks down. If it doesn't work out, you have to cut your loss, reset for the next trade setup. But this case, it worked out. Now, if you're a little gun shy about entering as it breaks down, the next good entry is based on the breakdown level. If it broke down, as you guys can see here, we closed below 395.7. So it broke down, that level becomes resistant. So the next entry for a put would be when it tests as resistant. And that's what happened on the next candle, the 10 o'clock candle. You guys see it tested 395.7, rejection, eventually led down to the 398.5 level, which was our next target, level to level. However, it did not stay bearish. It did not stay bearish. What is Uncle's favorite trade setups? If you've been watching long enough, you guys would know. It is the false breakdown and the false breakout setups, okay? So we break down on support, 395.77, and then boom, at that 11:15, 11:30 candle, it recaptured 395.7. This was alerted in the group. 395.7 recaptured here, 397 to 397.5 zone in play with 398.5 above. And boy, did that trade work out beautifully. Boom, and it just melted up for the rest of the day, going as high as 401-ish, okay? Very nice. So day trading, very nice. Now let's get to the daily chart. As I mentioned, guys, we had 3 closes, 3 daily candle closes above these critical levels, and we're still not getting that big bounce to the upside that we thought, or at least I thought we could have gotten, okay? So I'm gonna go to the weekly chart real quick, okay? Weekly chart, I'll zoom out a little bit so you guys can see the green trend line right here that I got started from January high connected to March 2022 high to August high, right? Bunch of tests, okay? We got more tests over here around December high and all that happy stuff. But look at the orange line right here. That's the 50-week moving average, okay? You guys can see it served as some strong resistance starting back in August high. We tested again back in December, and we tested again this week as of resistance. So this, you know, this yearly trend line, or someone call it the bear market trend line, has not, you know, it's not doing its job We get the breakout. It's not giving us that big move to the upside, giving us these weak, pathetic breakouts. But look at that 50 weekly moving average is at 402. So for me to be bullish, I would like to see SPY clear 402. Close above that 50 weekly moving average, because this, like I said, this bear market trend line is being useless. A lot of people are talking about it. A lot of people are looking at it. So the market makers are not going to give us the reaction I thought or was hoping we get. So for me, in my opinion, watch that 50 weekly moving average. That is at 402. That's the level that bulls must clear, in my opinion. Okay, now shorter term wise, this is where I give you guys the bull case scenario and the bear case scenario. All right. So based on that bear market trend line, I have support at 398.5 and also my triangle pattern at 397. Okay. Those are the two critical support levels. Here is the bull case. Bull case. As long as those two level holds, the breakout holds. Okay. If we get a breakout, gonna assume, because we don't know for sure what's gonna happen in the future, but since we get a breakout, right, based on previous tendencies for decades of it happening, when SPY clears a resistance, more often than not, it goes up higher, right? Not a 100% thing. I'd say about 50-60%, okay? 51 to 60%. Anyways, as long as those support holds, the breakout holds, okay? I would need to see the next resistance level clear. Like I said, 402. Above 400, 402 is the next critical resistance, okay? Clear 402. We can possibly go retest 403.5 and that 405.5 level, okay? 405.5 is an area of liquidity that I got here that has not been filled yet. All right, above 405 is 407, 408, and 410 to 410.5 zone back in December highs, okay? That's your bull case scenario. 397 to 398.5 must hold that support. I want to see, like I said, based on that 50 weekly moving average, clear and close above 402 for me to get a little more bullish, okay? Now, assuming we don't get any gap downs or gap ups, if SPY breaks down 398.5 and 397, look to short, okay? The next support level is that 200 daily moving average. We back tested the 200 daily moving average as a support today, okay? We had a false breakdown setup based off of it intraday. We almost tested the 50 daily moving average at 393 almost, okay? But if it's sloping up, it might look like we did back tested that in the coming days, okay? But like I said, if it breaks down 398.5 and 397, we got a false breakout setup on our hand. If it gaps below it again, we want to see it test those levels as resistant and it defends. If it don't test those levels as resistant and defend, we want to see it break down the next support level, which I said is a 200 daily moving average, which is at 395.2-ish right now, okay? It probably dropped down to 395 by tomorrow. So below 395, look to short. 393-ish is the 50 daily moving average. That's the next level. If you play it level to level like Unco, that's where you want to take some profits and leave a runner. And of course, if that breaks down, we could see more lower targets, 392, 390, 388-ish. And then maybe we'll test the next fib level that I got at 386.6. Okay, that would be the 38.2 fib level. Remember, breaking 386.6. Okay, we broke that out back in early January. You guys can see it right there. We had 2 weeks of consolidating or basing, and when we broke that 386.6 level, this is what triggered this big up move. All right, so a loss of 386 would be very bearish, and of course this triangle pattern support of is at 385.5 now. Breaking that down, in my opinion, would be a big sign, in my opinion, that bears have taken back control and we can expect some lower lows. Okay, guys, so above 398.5 with 397 lowest, stay bullish. But still, I need to see the next resistance level clear, which I said is 402 for me to want to look for longs, all right, or calls, and I'll play it level to level, 403.5, 405.5, and the upper targets that I mentioned, all right? And remember, if those levels fail, look to short, play it level to level, or look to short the next support level that I mentioned, okay? Please add these levels to your charts. Triple Q here. Triple Q still not looking as bearish as some of the bears would like for it, okay? Because here's what happened. I had this channel, this rising channel, okay? You guys can see here it connects January 6th low, January 19th, January 20th, and today's low. When we had that gap down, it tested and it bounced, guys. Okay, so the first support that I need to see hold is 286 and then 284.88. Okay, 284 is a 0.88 is a critical level. 284.88 is the 38.2 fib level that I got, okay, from August high down to October low. So that needs to, you know, for bulls, if you're a bull, you want to see that level continue to hold, all right? The next resistant level that I got, today it closed at 287.73. So I got 288 and 291 as the next resistant level. Breakout above 291 would break out this rising channel, and that will put 294.3-ish in play, all right? Look to short if 286 and especially 284.88 fail, and we can go back and test the support of this rising channel, okay? The rising channel is at 283. So breakdown of 283, that's when I would swing puts and target lower levels. 280, 277.5, and 273.8-ish would be the levels I'd be targeting, all right? IWM still basing just under this yellow trend, yellow line that I got here. This yellow line is the 38.2 Fibonacci level, okay, that I got from March 2020 low all the way up to all-time high, okay? So that 38.2 fib level at 187.6 is a very critical level in my opinion, and IWM is basing just below it. So if it gets the breakout, you know, it could base a little more, but if it gets the breakout, I would long with 190, 193.8-ish, and 195.5 in play, all right? Now, I would trust a rejection from critical resistance if it leads to breakdowns of support. So 186, 180, 183, 181.8-ish, 180.5, and those levels failed, you know, 177 would be next, okay? Those are the support levels that I got. Look to short when the support level fails, guys. And here is Tesla. Tesla beat earnings today, okay? And it's still basing just under that 146 level, all right? Like I've been mentioning all week, breakout of 146. Look to long 148, 151, 148, 155.5-ish, and 159 would be my upside targets if we can clear 146, all right? When would I short? You guys can see this white trend line that I got here connecting January 6th, January 13th, January 19th, and January 20th low, okay? Multiple tests. So we break down that support line. Breakdown is at 137.6. That is when I would swing puts, targeting 131.5, 128, 124, and maybe we can go fill the gap around 122-ish, all right? Apple still closing above that level I got at 140, all right? So like I said, I would get bearish below 140, break down 140. Next support is at 138 to 137.5. I was short if that level failed, targeting 134.4, 131.3-ish, and 129, all right? But it will have to start with the breakdown of 140, okay? RSI is very overbought, so Apple should be able to do it, but we'll see, okay? Price action is the shepherd. Next resistance I got is 143.5, very critical resistance there. If that clears, 146.5 and 150 would be in play, all right? Let's take a look at some inverses. VIX over here, you know, looking like it's still putting in lower highs, guys. Lower highs. Look like it wants to go back and test that 18 support level. So giving us that lower highs and looking like want to go test support. Might break down. All right, 18 is support. And below that, 15.5. DXY is also chopping, giving us lower highs. All right, so we'll see if that 101.5 break down. If 101.5 support breaks down, that will be bearish for the DXY. I need to see it clear some resistance before I can get bullish on the DXY, starting with that 102.5-ish level. All right, let's take a look at some option flow filter for 500K premiums or above. And here we go. Very, very bearish, 91% into puts. Okay, we've seen a lot of block orders here, seen a lot of sweep orders here, and they are majority, 91% into puts. Still not seeing any bullish stuff. 98% in the puts for triple Q IWM. 100% puts for IWM. Tesla, 83% in the puts for Tesla. 58% into puts for Apple. That's interesting. So we got a sweep order here, 5 million in premium, over 13,000 in size. Puts 137 strike price for February 17th. That's something you guys want to note if you want to. But we also got sweep orders, 6.7 million in premium, over 10,000 in size. We got calls, okay, for February 10th, 136 strike price, okay. So seeing some mixed reviews here. Overall though, majority are put contracts. And the VIX, nothing for the VIX today. So thank you guys so much for watching. If you want more content from Uncle Charters, I would love to be able to serve you guys more. You guys can subscribe to my Substack or join the Discord. I would love you guys so much. Thank you guys. Peace.